Our panelists are going to be Mr. Vikram Chachra, founding partner, 8i Ventures. Warm welcome to you, sir.
Thank you.
We have with us Ms. Melissa Crackman, CEO and founding partner, Emphasis Ventures. Warm welcome, ma'am. We also have Mr. Dirk Van Quaker-Baker, managing partner, BNext. Thank you so much for being here. Mr. Vikram Gupta, founder and managing partner, IVCap Ventures and Advisors. Our moderator is going to be Mr. Vaibhav Lodha, co-founder, FT Cash. This panel discussion is supported by CashRich. Mr. Vaibhav, it's all yours now.
Okay. Thank you, Muskan. Just to set some context, right? I remember back in 2020, there were $4 trillion that were infused in the names of grants, loans, tax breaks. And let's just think of that number, $4,000 billion were infused in the US economy, where the interest rates were close to zero. That money had to find a way somewhere. And it did find a way through the global stock market, startup ecosystem, even like pixelated images of URLs, also known as NFTs, costed more than my life savings. So there were individuals and corporations that were willing to buy anything that they can get their hands on. And everyone seemed to become an overnight expert at the stock market, and angel investing also became a trend. But slowly and surely, like a lot of things started to become expensive, and that still didn't stop us from trying to get more. At some point, the realization did hit that our money isn't as much worth as we think it is, and our investments aren't as sound as we hoped either. So 2022, it's been very hard for startup ecosystem. Newly listed companies have been butchered in the stock market, and unlisted ones are, especially the unicorns, are really trying to hold on to their valuation by a mere thread. So the big question on everyone's mind is, when does it end? I'd like to get everyone started by just sharing their thoughts as well. So Doug, do you want to go first?
So my thoughts about the status of the global sort of like macroeconomic situation. Yes. I think that would take too long. So
just in general, like what your thoughts are on this, like overall.
Yeah, I think I mean, like we went up for 20 years.
Yes.
And now we reached the peak maybe, and now we're looking down.
Okay.
I don't know if there's another peak or how far the valley is going, like how far down do we have to go, in short. But I think it's a healthy correction. And obviously, like, it's associated with inflation. On the one hand, it's associated with real productivity gains in markets like India and Southeast Asia vis-a-vis the US, which is a lot of asset inflation, as well as in Europe. So yeah, that's a short comment.
Got it. Okay. I believe there was a sense of over-optimism that led to this hype in valuations, right? In India, we saw a couple of such cycles, like I think back in 2012 and then 2015, 16 as well. Has it been simply the fear of missing out, or are there other mistakes that could have been avoided? Vikram, from IVCap, any thoughts?
So, first of all, thank you so much for the opportunity to speak here. And I think it's great to be amongst all these panelists. So I think, Vaibhav, to answer your question, I think the last 2-3 years have been very, very interesting. Post-COVID, of course, a lot of money was printed in the US. As you said, a lot of money found its way to India, investing in the India ecosystem. Therefore, 2021, there was a lot of liquidity in the market. Therefore, a lot of supply of money with the, demand for investing, especially in the late stage ecosystem. I think we saw valuations jumping up quite substantially. But I was looking at some data from a research report recently. If you look at purely from seed to Series A, that funding has actually gone up consistently from 2020 to 2021 to 2022, even though there was the 2021 was, from an overall funding perspective, was an aberration. So obviously, when you compare from a bigger picture perspective, you will see that 2022, the total funding has come down. But if you look at from an early stage perspective, I think it's up to Series A, about $2.3 billion has gone up to $2.7 billion just even from a YTD perspective. So I think the ecosystem is still actually attracting a lot of funds when it comes to early stage investments. And valuations have obviously corrected significantly, which is actually good news for investors who are sitting on cash right now.
Okay, thank you. This is interesting. Melissa, do you think there was any sense of fear of missing out or any mistakes at that time that could have been avoided over the last 2-3 years?
Well, in the world, there was many mistakes made, but far beyond our scope of conversation today.
Yeah.
Of course, there was some FOMO-driven investing happening during the boom of last year, and many of the rounds were sorted, and then there was sort of another cohort of investors that would pile in at every stage to rounds that were happening. However, I think it would be erroneous to claim that this hype cycle, if you will, and the kind of large rounds that happened last year were all mistakes, and that this is therefore we're out of the clear. In many ways, compared to overvalued rounds in the US or Europe or otherwise, a lot of the underlying companies that were raising in India and are still raising actually warrant a lot of the hype. And I say that the sort of fundamentals of where their addressable market is, how their numbers were doing, what the projections are, there was a lot of liquidity in the market and capital available for those rounds, but some of it was efficient, arguably, in terms of where the companies were compared to times when, for an Indian Series B company relative to its American peer, there's less capital available for the round. So of course, I agree with my fellow panelists that it's a kind of welcome correction in many ways that's happening right now. But I also think that it would be a mistake to say that it was all FOMO and now we have clarity and everything's perfect.
So you're saying we still have a lot of way to learn from our past mistakes?
Always. I mean, for good investors, there's always a lot to learn, and the markets are always learning. But generally, and I speak more from a foreign investment perspective, the foreign global sentiment on India is always cyclical. There's always kind of a year or two of relentless enthusiasm, and then one thing happens and everybody turns on it for a while. My side could see is that global markets hold India to a higher standard than many other markets. So when it's bad, it's perceived as extra bad. But no, there's of course a lot to learn and a lot to reflect on in terms of what's happened over the past 3 years with valuations and VC funding, and the great companies will still be able to raise in this market.
So I understand the entire fintech ecosystem is already reeling under the funding winter of sorts. But are there any areas that are still guarded where we're seeing offshoots which are coming off now, which probably have a positive sign? Vikram, Chachra, any thoughts on that?
Sure. I think we are very fortunate in the sense that unlike most markets, our central bank releases granular data on where the digital rupee is going. Right? Every month, you get data like clockwork on NPCI stuff, RTGS. So you can actually see where the digital rupee adoption is occurring. So to give you a sense, this is something we track religiously every month. You can see early trends emerging pretty quickly, and you can read into that. So if you look back at 2019, in a $1 trillion retail economy, about 200 billion was being paid digitally, which is just cards and UPI to merchants. Right? I'm not talking about P2P, just specific to merchants. That number, when I tracked it as of last month, was 750 billion.
Okay.
Now, what that means is that the average retailer got formalized. So we knew that, and whether you spoke to a Kirana wala or whoever it is, 20% of the revenues they were collecting was digital, the 70 to 80% was cash. Right? Now that number has flipped. What that means is all of these people have to start paying taxes, most of them, to some extent, at a certain cutoff, about like $200,000 and above, you have to start filing GST returns and so on. So if COVID dropped digital adoption of payments with consumers, compliance is going to drive adoption of payments and fintech and all of these things. So what that means is that API is not going to be able to do that. So I think what we are looking ahead, at least from our lens, is solutioning will matter.
Okay.
So the market is shifting away from CTOs to CFOs as decision makers. Right? People will look for solutions. payments is just the starting point. That's why it's getting commoditized.
Okay.
You need to add compliance, you need to add accounting, you need to add a whole bunch of other things. So you got to basically improve the CFO suite. What the CFO is doing, you need to make that person super efficient. They don't care about technology. They don't care about your API. They care about getting stuff done 10x faster, reducing the DPDs and so on. So I think what you'll start to see is fintech starting to get verticalized, more small. So this is the era of SMB tech. The next decade, if you're looking for in my view, and this is our house view as well, if you're looking for the next $100 billion company globally, it's going to be more small business. Of course, you will have great consumer companies emerge, but those are going to be more difficult. But I mean, if you just look at your experience, the consumers, if you look at the banking stack specifically, right? There is a banking stack for consumers, there is a banking stack for enterprise. So if you're Fortune 500, HDFC will give you something like an eNet with Maker Checker and all, right? If you're a consumer, it's designed for a specific persona. What happens to a small business which has 2-3 decision makers? Is nothing for them. That's why suddenly we are making 50 payments a month in my little management company, let's say, and I'm having to deal with 50 OTPs, right? So that stack will start to get created. So you need to take small business finance out of banks, and you will start to see people do that piece by piece. That is our lens. And you'll see more vertical solutions mapped around the working capital cycle and all of that. So this is a little bit of a granular view, but broadly, if you ask me, SMB tech, I think is very interesting. Nice. Within that, verticalization is how we're thinking.
Nice. As somebody working in the SME space, I'm really glad to hear that. Like, I think it makes a lot of sense.
I mean, that's what we are saying, right? You should just see where the rupee is going in terms of the adoption, right? You can pretty much see, like, even the GST signups, it's not like the GDP has grown that much compared to the GST collection. So I think if you start collating the data, it starts to speak to you.
Makes sense. No, that's a very good point. Doug, do you have any thoughts on that? Anything you're seeing as a parallel between the international markets versus Indian markets?
Yeah, sure. I mean, so I agree, first of all, very much so with Vikram. And we have backed quite a few companies in that category of sort of SME tech and verticalization of different solutions, including sort of compliance solutions that come online with sort of digitalization of the rupee and then like having to file taxes, etc. Beyond that, I think like I'm very bullish on fintech as an export good from India, as a matter of fact. So if you study markets globally, I think India is one of the most interesting markets to look at from a fintech perspective. And I think it's really revolutionary innovation that's coming out of India. I think the regulatory environment is highly fluid, is very interesting. I think we've all learned sort of like 1 or 2 lessons maybe over the last 5 years. And talking about the lessons, I think it has been historically often the case we want to disrupt banks or we want to disrupt incumbents. I think there's a lot of innovations actually happening now aligning with banks and having a form factor that's exportable fintech from India built for the world aligned with banks. And I think there are a lot of very interesting companies coming out of that sort of like genre.
Nice. Okay. And so Vikram, from IVCAP, if I had to come to one question, right? Like I think you mentioned or touched on this before, that early stage isn't as badly impacted as the growth stage or like late stage companies. Do you see like any specific form on that in early stage that has really taken off in the last couple of years?
I think the tech part of fintech actually is bringing more revolution in the fintech space, and I think, of course, with the UPI and Aadhar based, banking and other activities happening in the ecosystem, that has offered a lot more opportunities to startups to do multiple things, right? So. And then of course, eventually, if you're a startup in education or healthcare or consumer, there is payments involved. There's some form of fintech will be involved, right? In that sectors, other sectors as well. So, of course, lending is one part of the whole puzzle, but there are lots of other things which are happening in the sector. So I think I see huge amount of innovation happening in the entire sector related to payments, related to going to markets which are untapped, like rural. We are seeing a huge opportunity in rural fintech. In fact, we invested in a company called FinPay, which is actually giving access to banking to people in remote areas who otherwise don't have access to banking. And this has all happened in the last few years, especially after COVID. In fact, it has even accelerated further. So I think there are quite a few innovative business models which are happening and which have happened in the last couple of years.
Nice. Okay. Melissa, any thoughts on like what's exciting you the most in this space?
Charlie, I agree with both Dirk and Vikram in terms of what both points they made in terms of more broadly that and our core thesis, at our firm is very much that there's a lot to be learned in the rest of the world from what's happening in India FinTech, and that particularly now as kind of the market matures in many ways, and there's been a lot of lessons learned in the past few years. It's a prime time for many companies in India to expand internationally or to partner with global players to, in many ways, export the technology and innovation, both on tech side and business models that's happening. And then in particular, profitable businesses that actually make money around, modernizing the CFO suite, as Vikram was discussing, around small business solutions, around fraud, identity, risk, credit decisioning, kind of the core back-end technology stack for many different financial services. All of that is ripe, and that is where we're investing. We've invested in many companies in that space. In addition, it's a common thing we will all say at every year, any India FinTech event, but InsurTech is still widely kind of under-penetrated, both in terms of in the market in India, as well as with technology. So the large incumbents still haven't adopted a lot of tech that's available to them, and we will continue to see innovations over the next few years with a lot of room for them to grow and not needing the kind of massive venture funding to fuel marketing-led growth, while they're able to succeed. So all of those things and more are exciting to us. Capital markets tech, I think, falls into the same category where things could really scale even when there isn't a lot of kind of consumer-funded high, mega growth rounds happening to fuel growth like a neobank would need. Nice.
Wow. Actually, so I'm hearing 4 thoughts here. So one is SME banking. One is regarding regulatory tech or banking tech that can also be exported outside. Then Vikram said rural tech, which is very interesting as well. And then you're mentioning a large segment of it, which is also insurance tech. So I think that still covers a large part of it as well. I think payments in India is fairly well covered as well already. So moving on, right? I think, Melissa, you also gave me a segue into, you mentioned about profitability. And I think profitability and unit economics are 2 things that I think are now in this investment cycle are key as a decision makers, especially in your places as well. Any other things that have changed from the last couple of years in terms of what the investment decisioning was to look at versus now, except maybe profitability and unit economics? Vikram, Chacha, any thoughts?
Well, look, I think this year RBI has been super active.
Yeah.
So you can't really leave it. I think you have to map out every segment of fintech and say, okay, where is RBI coming? Where will they regulate? So the assumption was if it's not regulated, they're going to leave it open, right? And so we saw PGs get licensed, and 188 people. Paytm's license, had to be reapplied, which is now causing some risk to them. So I think what's going to happen is a company may grow at early stages and maybe early stage investors will support, but for people to double down aggressively, I think the regulatory ambit has to be covered very clearly, right? And if there is a lack of clarity, then people have to address that. So I think that's no longer kind of in the back of my head. It's very much front and center.
Okay.
So that's something we will be identifying, particularly in 2023, which are the areas, for example, which are likely to get regulated. Well, I'll give you an example. So, the digital lending norms came and, they left FLDG. They said, okay, intermediaries cannot offer unless they have an NBFC. Getting a little bit technical.
Yeah.
But they have not, sort of put a limit on how much risk you can manage. Right? So if I put 5% FLDG, that means I can lever up 20x theoretically.
Yeah.
Will RBI allow that? That's a question to ask.
Yeah.
Right? So you're going to see as fintechs get larger, their balance sheets with the co-lending and direct lending get larger. RBI will keep addressing. So you have to self-regulate. You have to say, okay, what is kosher by looking at the best run companies? And so I will limit my my leverage to that level.
Okay.
So that you don't get blindsided. So I think you have to more and more start thinking about what does RBI want in spirit? What is going to freak out RBI? So that you stay within those guardrails. So you need a slightly higher level of sophistication as an investor now.
Okay.
Right? In terms of understanding what the RBI wants. I think whether we like it or not, that's a reality. That's the lane you have to drive within the RBI lane is my point of view.
Okay, makes sense. Dirk, I think, like I mentioned, profitability, unit economics. Vikram mentioned about the needs of RBI. Any other thoughts on things that you're looking at very closely in terms of fintech investments?
So I think over the years, I learned to appreciate unique models a lot more for obvious reasons, and it plays into unit economics often. So if you back something unique, and again, back to my point, like aligned with banks, but like actually export good that's innovative and hasn't been done in the world before in fintech. I think many of those are emerging from India.
Okay.
When you're not competing against anybody, then by definition you're more capital efficient. You don't have to burn, etc. pp. Right. So like he always jokes, competition is for losers. I tend to agree more and more. The second one is internally we sometimes say like now the decade of the donkeys has started versus the unicorns, right? So like you can run for many miles without water, and you can take a lot of load. And I think really like looking for different traits in some of the founders that we back these days. And I think that's probably alongside unit economics and then regulatory compliance and alliance and founders that actively think about it from the get-go rather than trying to disrupt, certainly center stage for us.
Okay, got it. Vikram, any thoughts?
I guess you're asking me that question.
Yeah, of course.
Okay, so for us at IVCAP, I think unit economics was always important, irrespective of a 2021 kind of a market.
Yes.
I guess it has obviously become even more important at this stage. The valuations were earlier, people only talking about top line and, different kinds of numbers. And I think people have started asking very hard questions these days, right? So in terms of by when are you going to be profitable if you're already not profitable? The burn, I think people are going much more into details of, your actual expenses, the founder salaries and the cost of customer acquisition, things like those. So it's a good thing actually for the ecosystem, because in that sense, the founders are also becoming more rational and practical. In fact, I've heard a few businesses, they've cut down on their spending substantially while the business continues to grow. So it's not that, I think it was just the mindset, So actually the level of burn has gone down substantially without impacting the growth. So which actually shows that people are burning cash, without actually having a positive impact on the burn.
Nice. Melissa, any thoughts? Anything else apart from these that you've seen as a trend?
No, I think it's well summarized, and I would say that clarity and the word passion is always overused in terms of a founder, that they need to be passionate. That sort of obsession that they're going to weather the storm and be in a business for the very long run, that it's sort of their life's work, as long as they're working on it. Whether things are glamorous and fun, and they're doing a keynote in Bangalore somewhere, or it's a slog of 2 weeks or 2 months where things are very difficult. That's very important, and it's obviously something that is really important even for founders to decide when they're starting up.
Sure.
Because quick traction based on things that aren't real are over for the foreseeable future.
Makes sense. Thank you. So I'll just turn to one of the questions that has been posted by an online attendee. Dev, we can start with you. When do the experts believe that the bull market and funding is likely to return?
Okay, so so we all have a crystal ball. Yeah. Like I think it's a very subjective question, but
you can wear your astrologer's hat.
I agree with Melissa that the good companies will always get funded. Yeah. We described some of the characteristics: real unit economics, real traction, real unique business model, founders who are long-term committed, and the advice we give to our portfolio: design your company in a way that you can go default alive if you have to within a period of 3 to 6 months. Which anyway, that's on the business model side. On the macro side, I think it's very tightly linked to inflation, our belief on inflation in the US, because ultimately that's the responsibility of the Fed to control. So they will continue raising interest rates until they feel that's under control.
Yeah.
And I just got back from a business trip in the US and I didn't feel it was cheap or slowing down. So
it's not cheap.
So I don't know. Give it another 12 months. Ask me again.
So Vikram Gupta, like if I had to ask you the same question, do you see any timely return of the bull market?
It really depends on how you define the bull market, because I think if people are expecting that 2021 should come back, that's not going to happen. And at least I don't see that in the next many years.
Okay.
But I think, and if they're expecting the valuations multiples to come back, I think again agree with Melissa and both with Dirk as well. Good companies will continue to get good valuations. If they're doing well, good founders will continue to get funding. But if you're an average company, the chances are that you may not even get funded. So I think the bull market probably, I would say that there's a lot of dry powder. We're talking about $16 billion of dry powder sitting right now, deployed.
Right.
Of course, at some point, this capital has to come into the
market.
And my understanding is it might take 6 to 8 months before you start seeing some active deals happening. Quite a few deals are already happening as we speak, not getting announced right now, but you will get to hear about them soon.
Interesting. Okay. So because even from a number that you mentioned earlier, right? I think 16 billion, like you said, if it's already sitting, that means even if I had to say divide by 3 or 4, considering the deployment cycle typically that is there, it's about $4 billion a year. That's a lot of investments to come, maybe between early to growth stage, right? That's still a lot of money to be deployed. So I'm sure that there will be investments coming in, but I think they'll be across different types of companies. Melissa, do you have any thoughts on this?
No, I think that in many ways it's anyone's guess. And so we could all pontificate, but there's so much happening in the sort of geopolitical sphere and, in the US economy, et cetera, that it will all affect the propensity of some of this dry powder to be allocated in the coming year or two. And, the conclusion of all of this in terms of guessing what's going to happen with the funding climate is that fintech founders should really keep their heads down and focus on solving core problems for their customers, whether that's individuals or businesses. And, many investors are not tourists and in this for the long run and will deploy either way to support good founders as all of us ride these rocky waters over the next couple of years.
Nice. Thank you. So there's one other question that has come from one of our viewers. Compared to the fintech ecosystem in US and China, where do you see India? And will India get more fintech funding in 2023 compared to US or China? Vikram Chachra, any thoughts on this? Like, any predictions? You're on mute.
Sir, I'll jump in. Sorry to be the party spoiler, but we have to wrap up in 3 minutes.
Okay. So Vikram, maybe last thoughts.
So look, I think I think I'm going to talk more about relevant to India because I don't live in the US. I think there's a lot of money in the US. I think since this is an India FinTech Forum, let me address that. So let me kind of like share very quickly. I lived through the dot-com bust 20 years ago. I was a founder. So I have, I would say, a little bit of history with that.
Yeah.
The dot-com bust, which had a 99% wipeout, has a parallel with the crypto bust. If you don't have a business model, you die. Okay. The software companies, the enterprise software companies like the Oracle, the Sybases, and so on, which was enterprise software embedded inside the on-site. That's the equivalent of cloud infrastructure today.
Okay.
However, everything is getting oversold. And that is actually now driving private valuations as well.
Okay.
So suddenly when some founder says I should be worth 20x revenue, but a listed company is trading at the median payment, let's say, is at 8 to 9 times. The VCs are saying, why not 8 to 9 times? Of course, those companies are median growth is 30%.
Yeah.
Right. Some company may be growing at 200 or 300%. So I think first of all, my advice to founders is get savvy about how listed companies are valued, so that you can hold your ground. I'm talking about mid to late stage founders.
Okay.
Don't just take what VCs are giving you. They're doing incomplete work sometimes.
Okay.
So, go sign up for Koifin, which is a great platform. I have no investment in that, but that's what I use to follow comms. Reach out to me. I will send you my sheets first.
Sure.
Right.
Okay.
Second of all, I think it's wrong to also assume that the new leadership in tech or in fintech will look anything similar to the old leadership.
Okay.
People will keep throwing money into that. A lot of VCs are waiting for this category leadership to emerge and a lot of people to die. But new paradigms emerge with new adoptions. So for example, the Uberized economy emerged because GPS chips became prevalent across. It became ubiquitous. And the battery power in phones became much superior. Otherwise, phones used to die in an hour.
Yeah.
Right, with the GPS chips. So when that became stable, you could use Google Maps and Uber arose.
Yeah.
So what is that equivalent in fintech or in other sectors? That's what you have to keep an eye on. Where adoption is becoming full radical adoption.
Okay.
So my view is, let's say you have 100% digital payment almost, right? What is that paradigm? What will it trigger? That's something to think about. I think it's very important to look at the tailwinds. I'm not sure where the new leadership emerges in terms of categories, right?
Okay.
So our job as VCs, we are lucky. We don't have to take a bet on one company. We just keep betting. We keep following the data.
Yeah.
But broadly, that's where the greatest founders will emerge, who understand where the new adoption curves are and they build something ahead of that. That's broadly. I know it's not a complete answer. But I don't see any reason why India will not continue to attract. Okay, one final thing. 20% of alternative assets were allocated to Asia. Of that, 12% was to China. I'm assuming that China is going to shrink a lot. Some of it will flow into India. A lot of it, obviously, will remain in South Korea. So I think you are going to see over-allocation. At the same time, the allocators are over-allocated to tech or privates because public stocks are down. So not easy for new managers, but ultimately, I think India's I would say share of the overall assets, private assets, will get actually larger. So I think we will be okay. That's my view.
Nice. No, great thoughts. Thank you so much all for your time. Really interesting discussion. I'm sure it can go much longer. We're running short of time now. Muskan, over to you.
Yes. Thank you for moderating so wonderfully, Mr. Vaibhav, and thanking all the panelists. Thank you for being here this evening. It was wonderful having all of you.
Sure. Thank you so much.